on.
Hello, my name is Caroline Réaume. I'm a tax lawyer, and I work mostly with entrepreneurs, professionals, and athletes. And this week, I'm back with Sophie Lalonde. She's a financial planner and also cross-border specialist. So hello, Sophie.
Hi.
So Sophie, last week, you talked about the importance for individual of having a financial plan. You even talked about 25 risks to review while preparing the plan. And we went through basically the topics, the components, the information that you will find inside the plan. And I know that this week, considering everything that is going on with COVID-19 and what we hear and see in the news, I know that you want to address one topic more specifically this week. It's a component of risk management, and you want to talk especially about health risks. So can you explain why you wanted to discuss that today?
Well, like I said last week, right, when we talk about financial planning, there's a lot of risk, and there's two things you can do with risk, right? You can just assume it, which basically means put your head under the sand and hope to God that nothing will happen to you, right? Make a lot of prayers. Or you can transfer it and actually address it, right? And transfer the risk. When you're looking at COVID-19, what happens is a lot of people are starting to be more aware of their vulnerability, right? When you look at statistics, all of a sudden you're looking at a lot of mental illness, a lot of depression, anxiety, and so forth. So how do you address that? I mean, this is all nice and dandy. It's actually been proven in Canada that 26% of working individual will actually at one point in their working career face a severe disability. And more often than not, it's a burnout or anxiety attacks or things like that, right? And let's face it, COVID-19 has brought quite a bit of that. So there is insurance called disability insurance, which we really recommend most of the time for people working to actually look into it, that what happens if you lose your job or you're not capable of doing your work for a certain period of time. Doesn't mean that everything has stopped, but for that period of time, how do you actually cover? Remember, we talked about the budget, right? There's different levels in your budgets. So how do you actually deal with the lack of income coming in? So disability insurance will actually deal with that. But you do need to work to do that.
Okay.
And I think the premiums are quite reasonable. Now, obviously, we are dealing right now with a very specific situation. The pandemic causes certain cases first that the premiums will go up. And also when you look at it, there's also the challenges of your income, okay? It is noted that you're not supposed to get rich with disability insurance. The idea is not that, okay, I do a burnout and all of a sudden I'm rich, right? It'll get the anxiety away, but more, at least it won't add to it. But you're actually not allowed to get, there's a clause where you're not allowed to actually get welfare. So what they do now is the new economy will actually, in some cases, they will readdress your income because it is based on your regular income. So let's say, for the sake of argument, you're a business owner and you own a restaurant and you've made $100,000 a year, whatever. This is what you're covering. All of a sudden, now you're facing that they're readdressing the fact: are you really capable of making $100,000? Will your restaurant actually survive? Or all of a sudden, will you be at 30,000? And same thing goes with retail stores. So there's actually a discussion over the income, and it needs to be readdressed. So that's an important factor that people should be aware of. And but the great thing about disability is it covers mental illness, different from other situation where you can have critical illness insurance, which is more like for cancer, heart attack, and so forth, but it does not cover mental illness. It does cover 25 different type of critical illness, and it's kind of there's serious illnesses. When you deal with critical illness, you really have to look at the clause, because let's take an example which happened to me not long ago, right? The client has prostate cancer, right? And you think, word cancer, so it's a serious illness, therefore he's eligible, right? And in some cases, if you don't read the definition properly, he might be eligible to only 10% or 15% of the amount, instead of being eligible for the full amount. So it makes a difference if you're not aware, because prostate cancer at 96% of the time, you will actually survive, especially if you had it early detection. Same with breast cancer. So you really have to understand the seriousness of the illness and the definition that's actually written in your insurance. But the great thing about it is, in a lot of cases, let's face it, the health system that we have, the free health system, the government just doesn't have the money. So there are treatments that are available elsewhere that are more costly but will not be given for free, so you'll have to pay for it. And these treatments more often will save your life. I had a case where one of my clients had 6 months. He had cancer and they gave him 6 months and he survived 11 years. But he had to go to the state to get the treatment.
Okay. Yeah.
But he did survive for 11 years more and he had a decent, good life. Like, it's not just he was surviving basically just to breathe, he was having a good life. Certain challenges, obviously, when you deal with cancer, but it did give him an extra 11 years. Where he was at one point actually cancer-free, but it came back, unfortunately. But just to say, it does give you the necessary money, because when you go to the state or when you go elsewhere, it can be quite costly. I mean, in some cases, it can go up to hundreds of thousands a year. We even see it in funding. Like sometimes if you go on to Facebook or things like that, you see people, you know, begging for their life and their story. And it's a sad story, right? They're facing terminal, their kids are young and they need 400 or 500,000. So they're begging online to get the money. Critical illness will make it a lot easier for you to deal with that. And great thing is they give you the check. Once you're diagnosed, you get a check right away. And you can do whatever you want with it. So if you want to take your kids and go on a travel or go to Africa or whatever, it's not like you have to report to anybody what you're doing with that.
Okay, so basically, disability, you won't get a lump sum payment. So it's a difference between the two.
Yes,
so
absolutely.
Disability, I would receive, like, is it a monthly versus critical illness where I will get a check, so basically a lump sum that I will
do
receive
whatever you want with it. And you're right. In disability, it's a percentage of your salary. It's based really upon your income. And obviously the amount that you requested, right? Whether you wanted 60 or 70 or 75, but that is what it's based on. The other thing also that you see a lot nowadays is long-term care, right? Not really good news these days. A little scary what you hear in the news about how the facilities are run. But the reality is most of us actually, believe it or not, due to medical advances, will see our 80th birthday. And many of us might be healthy, but many of us will also face disabilities in the sense of being able to take care of ourselves. So long-term care is basically is if you can't do 2 of your basic daily function, that's when long-term care comes in. And what you do is you basically identify right away the amount that you would want per week, which will be paid by month, but per week, at the time of your long-term care needs. Now, at least 50% of us will need that. And it's probably as time goes on, more like closer to 80% of us will need it. And believe it or not, right now, a lot of people believe that, well, there's free facility and I'm just going to be put in a home and whatever, and the government's going to cover. But if you look at the statistic for Canadian, depending on the province you live, you're looking at close to $5,000 out of pocket money to cover long-term care needs. And a lot of people are not aware of that. Now, I'm going to give you a statistic that's maybe not too encouraging. But legally, the only thing that in a long-term care facility, they only have to change your diapers twice a day. So that's a little scary when you think about it. And you've heard reports where there's one nurse for like 25 to 30 people. It's a lot of people to take care of. So depending upon what you're looking for, you might want to consider yourself to have maybe a private nurse or a little bit more help to make sure that you're actually well taken care of. So I do recommend it quite a bit, right?
We're talking about hairdressers, so will I have someone to do if I need someone to do my hair, I guess I need to buy that type of insurance.
Oh, for sure, because they're not doing your hair. That I guarantee you. Forget your hair. I mean, and you know, I don't know how good you are to do your own hair, but that's out. But you know, And if you want a private nurse and stay home, with a lot of people nowadays, you know, especially with what happened, or really considering that I might want to stay home, whatever, you're looking at north of 10,000 a month, which is quite a bit for full-time services.
Oh.
So that can be quite expensive. And yes, you can self-fund. I mean, I'm a strong advocate also of self-funding. I believe in investments, right? But it can actually eat up a lot of your assets quite quickly.
Yeah.
And not always the easiest.
Yeah. So you were talking about, you know, how much it can cost, especially, you know, if I'm in a nursing home or depending on, you know, my hairdresser. But how do I know how much coverage I need? And when is it the good time to decide, okay, I should be looking at critical illness, disability, or long-term care? So when should I start looking, or, you know, basically, you know, maybe thinking about, you know, taking these types of insurance?
Well, it's a good question, actually. To start with, it starts with your plan, and it also starts with your risk tolerance, right? Like I said, you can self-fund, but self-funding requires more risk associated with it than if you use an insurance product, right? So if you're really risk averse, I suggest you use an insurance product. If you're not, you can always gamble with the market, right? Not gamble, but I mean, you'd have more risk. I don't like the word gamble because that's the wrong word. Actually, I shouldn't have said that. But, you know, obviously there's more volatility if you do that type of strategy. Now, as to how much, like I said, insurance is for preservation of capital, and it's for protection, right? It is not made to make you wealthy. I mean, you don't deal with insurance because all of a sudden, anyway, not for health insurance, maybe in some whole life and things like that, but not for health insurance.
But that would be for the next generation that would be wealthy.
Yeah, that's it, right? Well, you can always borrow against your whole life insurance. That's why I said in some components, you can actually do an investment with some of your insurance products. But that being said, more often than not, it's for preservation of capital or for protection. So when you're looking at, if you're looking at disability, remember I told last time I talked about our budget, which everybody loves to talk about, right? Well, you really want to fix that. That fixed part really has to be covered. And you also want to add a little cushion because more often than not, if you end up with disability, it also means that you will need more help. You're not as self-sufficient, right? So if you, let's say you ended up in a car accident, you might need some physiotherapy or whatever. If you're in a burnout, you might need help to more with the home cleaning and so forth. So always add a little cushion for that.
Okay.
And that's basically what you're looking for. When you're looking for long-term care, it's really a question of what your needs are and how comfortable you want to be. Like I said, if you want, in your case, your hairdresser to do your hair every day so you look pretty, you'll need a little bit more. So what you're looking at is really a question of your expenses, nurses, and so forth. How much asset do you really have right now? It's funny to say because most people, the younger you are, the more insurance you need, actually. And the opposite happens as you grow older because you have more assets to cover some of your needs, right? Again, like I said, it's not the idea is not
in theory. In theory.
Well, yeah, assuming that you did your financial plan and you followed it and you were accountable to it, remember you got a 95% success rate if you do that. So assuming that you actually did that, you should be wealthier. You should be comfortable when you're older, right? You have assets in place. Your kids are out of the house, let's face it, those are your biggest expense. So so already you're doing great, your debts are finally paid off, so this is good too. So generally speaking, as you get older, you actually need less insurance. But a young person actually needs more, especially if they have young kids and a lot of debt and so forth, because when they lose their ability, it's for a longer period of time, and also they still have a lot of expenses to cover, whether for your kids, the education and so forth, the debt, and there's no income coming in. So obviously you need more insurance at that point. You ask a good question when you say how old. Obviously disability is when you're working. And unless you can cover your fix with your assets, then the rest should be right away with your disability. And that's probably why a lot of large cap corporations usually have through your health benefits, so you can actually have it more often than not into that package. And if you don't, like for a lot of self-employed entrepreneurs and so forth, you can actually look at association, and they do give plans in different type of association which you can get disability. When you're looking at critical illness, you really have to make sure you're healthy, because or else you're going to be refused. So to start with, you cannot get critical illness past 65. So definitely before 65. And in a lot of cases, there might be a period where you have to pay in before they actually pay out. So it could be that you have to hold it for 5 years or whatever. In some cases, it's just paid right away. But those, again, the clauses that you have to verify. And so you have to be healthy. So I wouldn't suggest that you wait too long. But that being said, I'm not going to tell you to take somebody who's 18 years old and start putting critical illness, because you're paying for a long time for no reason. So generally speaking, I would say the sweet spot is more in your 40s or early 50s. That's the sweet spot for that one. And same thing goes with long-term care. There's different strategy. I personally like, this is me, for long-term care is more in your 40s. And the one I like is where there's actually a year cadence, right? Waiting period. And the reason for that is the premium will go down about to half price of what it would be regularly. So it's a lot cheaper.
Wow.
And in some instances it would only kick in after 65. But for doing that, you're going to drop your premium half to sometimes even 3/4 of the way, just because you're doing that, right? And more often than not, you're not going to need long-term care in your 50s, but rather in your 80s. So the fact that it only kicks in at 65, I'm quite comfortable with that. Now, when you look at critical illness, if you get it in your 40s, and you can do plans where it's paid in 15 years or 20 years, which is your working years, which is great. And then you're covered, you're done, you don't have to worry about it, right? And on the other side is if you're going to the States, by the way, did you know that only Canada offers guaranteed level critical illness in the world?
Well, I didn't know before what you told me, but I didn't know about that. Now I know.
Well, so if you're going to the States or out of town and you decide to move out, you might want to take critical illness before, because you're actually the only country that actually offers that. So, and you can pay within 15, 20 years, and it's still, whether you're outside, it still stays, it's still valid. It's not like they lose the obligation or whatever, the insurance doesn't have to pay. It still has to pay.
So I won't lose it, if I leave Canada, I'm still, I'm going to get, if
as long as your premium are paid, and whether you did it in 15 years or 20 years or life, as long as your premiums are paid, you don't lose it, you keep it.
Okay. And you're talking about, things that may basically affect the premium. So are there other things that we should think about, or what really affects the premiums?
Well, insurance are smart people, right? That are actually evaluating the value of your premiums. So the more gadget I want, the more protection I want, obviously the higher is my premium, right? So I personally like inflation. I do believe going forward, you're going to have to face a lot of inflation. So obviously, if you need inflation protection, your premium will go up, right? Your age, obviously, goes without saying. There's less risk if you're younger than older. If I take a long-term care at 75, well, my premium will be slightly higher than from 40, right? So the insurance people aren't stupid, right? So they go with the average, right? So the age is another factor. Also, whether you smoke or you don't smoke, big factor, by the way. So if the yellow teeth and the inability to breathe and run is not convincing you, maybe the health insurance premium will. So that is another factor. Anything of your history, right, or your family history, right? If there's a lot of heart attack within your family, that will actually affect. If you already had a heart attack or whatever, in some cases, what they'll do is they might refuse you for heart attacks, but they'll accept to cover you for other disease, right? If you had,
Oh, okay, you can do
like,
that, yeah.
yeah, if you already had like a heart attack or something, they might actually refuse for one, but give you for another type. So you get some
Okay.
insurance, but not for heart attacks. So it'll be written in your clause, right?
Uh-huh.
So never assume that you're not insurable,
Okay.
and it doesn't cost you anything to find out if you're insurable or not. And then that's what will tell you what your premium is. But
Mm-hmm.
obviously, the healthier, the less is your premium. So it's a good thing that you box and that you train yourself on a regular basis, because that actually brings your premium down. So
Yeah,
that's
yeah.
another factor. Another one that you can play with is actually your waiting period.
Okay, yes. Mm-hmm.
Like I mentioned before, right? I said you can bring down your premium by a lot if your premium, let's say you have a waiting period of a year. So what happens is the first year is you're self-funded, but then you
Mm-hmm.
cover for the rest, right?
Yeah.
So people who actually have a combination will often do that, and the premium will come down substantially.
Okay. And you can address that when you're doing the financial plan as well, saying,
Yeah,
well, if something happens, well, you
yeah,
will have enough to be able to cover like a year, and then, insurance then would kick in. Okay.
yeah. And you know, plans are changed the same as your insurance needs will change, right? So you adjust as you go along, right?
Mm-hmm.
So,
Mm-hmm. And you were talking about COVID-19. Would you say that is COVID-19 really affecting the insurance industry and potentially may have impacts on provisions that we will be finding in insurance contracts in maybe
yeah,
weeks, months, or years to come?
absolutely. You know, insurance these days have to pay a lot because there's a
Yeah.
lot of claims, right, due to COVID-19 and so forth. So obviously your premiums will go up, and in some cases they already have come up. So the cost of insurance will go up. Reality, when you look at it, is you're looking at the health system and you're going, okay, well, will the cost of health insurance go up or down? We're pretty sure that's going to go up because we just don't have the money for it. People are getting older.
Mm-hmm. Mm-hmm.
And yes, they're living longer, but they're not automatically living healthier in many cases. So there's a lot of challenges going with that. So one of the challenges you have is Dynacare, which is the company that does the testing for most of the insurance. I don't know if you ever taken an insurance, but the first thing they'll do is do your blood test, right? Your urine and so forth. So they'll do some tests to
Mm-hmm.
evaluate your health. Remember, it identifies which sector. There's 5 different sectors they put you in. So identify which sector they're going to put you in. And so because of COVID-19, that particular company doesn't do the testing anymore because they're doing the testing for COVID-19, believe it or not. So not for your insurance, but for COVID. So they're not available. So you actually have no flu test in some cases. You can get some insurance depending on your age group and the type of insurance you're looking at. You can actually get some insurance without any flu tests, depending on the amount.
Okay.
In other cases, what they'll do is they'll rely on your last physical test with your doctor if it's less than a year. So they'll rely on what the doctor has sent. So they'll ask you for your doctor's report, and they'll rely on that to be able to actually evaluate your risk. So that does make a difference. Like I said, with especially with disability, like I said, they're reevaluating what the income is. So are you really capable of doing the income that you're suggesting? In some fields, and they're more and more looking at your task, more than just your job description. So when they're asking you what you do, they really want to know what you do. Do you do the transportation? Do you actually meet people? Do you have to deliver food and what have you? Because what they're trying to do is evaluate risk. So now they're really asking at the type of task you're doing. Where before you just wrote the job, right? If you were a skydiver, the likelihood of you getting disability was very remote. But if you were an accountant, that was fine. There's no problem. But now they're going to ask you, do you actually meet people? You know, so I can know if you're going to end up with, social distancing, right? So
Yeah,
those
yeah.
So yeah, there are some major changes that are occurring due to COVID-19. There are changes coming along in the insurance as well.
Yeah, that may be a new question. Yes, are you meeting with people, when you're finance?
How much distance is there? Is there any plexiglass in between you and your client when you meet?
And this will affect the premium going up, going down. But yeah, and we're talking about premiums. But I know that when I talk about insurance with clients and even with friends, many of them will say, well, I find life insurance expensive. For many people, it's an expense. I know that's a tricky one, but what are your thoughts on this?
Well, it's a question of how much risk you're willing to, like I said, you can assume the risk, pray, get down on your knees. And if you're really good and God really likes you, maybe you don't have to worry about it. But, I find like in a lot of cases, already if you get sick, the last thing you want to do is worry about finance, right?
Oh, yeah.
I mean, you're dealing with cancer or you're dealing with a heart attack. Did you really want to go, oh, I don't think I can get that treatment. Oh, I don't think I can afford it. And what if I do? Am I going to put my family in challenges or whatever? And same thing goes with long-term care. It's actually more challenging for women, which is it's not that I want to be sexist, but it is the reality. Women, we don't have a challenge actually taking care of her husbands or our kids or whatever. We're very nurturing in nature. It's not always the same case for the husband. I hate to break it to you. More often than not, the husband will have more challenge to actually take care of their wife. So it's actually, and often also the women will outlive the husband.
Yes.
So it's actually a very big problem for women. And then it's a question of, do I really want to be a weight or a burden on my kids who at that point probably have their own life and have their own family to take care of their business. And on top of it, I'm going to put this burden on them. And how can we compensate for their needs? Because they also have financial needs at that point, right? So if they're taking care of me, well, they're not producing income, they're taking care of me. So how do we protect the one that's taking care of you? So when you say insurance is expensive, there's a break even. You can make a calculation, right? I always do that. I make a calculation based upon the premium you're paying versus what if you put that money aside? When is the break-in point actually comes? Is it in 15 years, 20 years, 30 years? And then you can make the decision, what's the likelihood that I might need this particular insurance or covering within that time. So
yeah. But I guess, it goes down to really, asking questions, looking at the numbers, taking the time basically to review your needs. I guess it's really important. And then at the end of the day, you can make a decision, but not just think, oh, I know it's going to be expensive, so I don't even want to talk about it. I think we have to sit down and really look at it. And like you were saying, there are many options, depending on, the type of contract, the waiting period, things like that.
There's all kinds of combination. Like I said, products exist for a reason. If they're still around, it's because they're good for a reason. It's really a question of what works best for you. Like you're going to talk about insurance, long-term care, when I was telling you it takes about $10,000 a month, right? But if all you have is registered account, that means $120,000 that I have to take out of registered account.
Yeah, boy.
So all of a sudden I'm in a high tax bracket. Now add your taxes because that's my net expense, and you're looking at depleting at $200,000 per year. So you end up paying quite a bit of taxes. So at that point, is insurance really costly? It may not be. It might actually be a saving that is much more efficient. But like I said, every situation is different depending upon your personal situation.
Yeah. So we'll see, with, following COVID-19, how people will, react to that or, feel about insurance, especially I would say maybe long-term or all the products that have to do with health risks, cover health risks. So yeah, that's great. So anything else you would like to share with us today or?
No, like I said last time, you got to do your plan. If you do your plan, you got a 95% success rate. So you got to look at everything that's out there.
Yeah. So you did your part. Now it's up, to people to come see you and discuss and, kind of look at all
their own professional. Have a discussion about it because you're aware of how vulnerable we are. And if anything, COVID-19 brought out is really, you should have a plan. You should look at the risks and reassess your risk and what you're comfortable taking.
Mm-hmm. Yeah, yeah. So, well, great. Thank you, Sophie, for sharing, this information with us. So this concludes our interview for today. So thanks everyone for joining.
Thank you, Caroline.
Bye-bye.